Welcome back. Sebastian, the other economic data, I guess, to take note of is that the unemployment figures are creeping up here. What can you tell us about the job picture in
Yeah,
Canada?
the job picture in Canada remains very good when you look at the employment rate, so the percentage of the population that is working for the 25, 54 years old, so the core of the labor force, it's still at close to an all-time high. So Canadians are working. The participation rate is very high too. So we have a good situation here. In the US, it's a bit different. They're working very hard to bring the participation rate up. Seems to be working recently, but Canada's labor market is way ahead of the one in the US. Of course, that comes with wage pressures and labor scarcity that are going to be issues probably for the next few years. So the picture for employment is good, although we did see unemployment tick up a little bit in the latest report. That had to do with some losses in jobs over the last 3 months. But remember that we regained all of the jobs that were lost during COVID last October. And in the US, it was just this summer that we reached that. So maybe we're a bit ahead of the cycle that we see in the US.
Okay. One of the things that you've noted, Sebastian, is that Canada's economy has become very sensitive to interest rates, especially relative to the US. How?
Yeah, sure. So when you look at the components of GDP, you see that the residential investment component now is at 10%. So Canadian GDP is roughly $2 trillion a year. So 10% of that is $200 billion a year that's linked to residential investment. And when people think about residential investment, we tend to think about construction first and then maybe renovation. But ownership transfer costs are also almost as equally important. So the volume of transaction is very important here. So now that we've seen a lot of tightening from the Bank of Canada, there's more to come. Likely we end the year at about 4% on the leading rate. So there's a few more rate hikes to come. Well, as we've seen that, we're seeing the housing market become slowly but surely a buyer's market. We're seeing fewer transactions. We're seeing less activity. So that puts the economy at risk, because if there's less construction, of course, this is a direct hit to GDP. But if there's less volumes of transaction too, there's about 2-3% of GDP that's at risk here.
We just brought up that chart, the residential investment. What's driving that here? And what I mean by that, Sebastian, is it because Canadians in general are carrying more debt and I'd say mortgage debt relative to the US? Or could it be that we're also more sensitive when it comes to debt?
Well, it used to be pretty much in line with the figure in the US. Canada's share of GDP based on residential investment is twice the size in the US. It's 10 here, 5 south. But it's the ownership transfer cost that has boomed recently in large part. And that's because the average price of a house in Toronto and in Vancouver, where we see the crunch of the housing market, has exploded, and now it's very high. So a share of these prices means higher costs for transactions. So that just blew that out of proportion. And of course, Canada is very sensitive to housing, because we have a lot of immigrants coming in the country. This is our secret weapon. Our population is growing fast because of immigration, and immigrants converge mostly towards Toronto and Vancouver, some Montreal, but mostly in those two regions. So you need to need to provide supply for these. So it's kind of a feature of the Canadian economy.
Now, I hate to bring that R word up because nobody likes to hear the R word, but are we headed for a recession, and would it be hard or soft?
Well, I think if we go into a recession, it's not going to be a hard one, because I
Okay.
think the bar is very high to see massive layoffs, both in Canada and the US, in an era of labor shortages. In Canada, we have about 0.75 job vacancies per unemployed. So there's a buffer there. And in the US, it's even larger. It's 2 job vacancies per unemployed person. So you have that buffer there. Probably this will shrink first before we start to see massive layoffs. And it's for recession odds, it's never 0 or 100. I would say in the US right now, where IA Financial Group is standing, it's about 60-70% odds of a recession south of the border. In Canada, we're still kind of on the fence at 50-50 by the end of 2023.
Okay, 20 seconds left until the next break. Bank of Canada, how many rate hikes do you expect this year?
I think we go all the way to 4%. This is what the market is pricing, so it wouldn't be a surprise. So likely it's going to be a 50 basis point rate hike at the next decision, and then a last one of 25 by the end of the year.